Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down the notable moves across financial markets through the lens of technical analysis. Hope you're doing well out there. Thanks for joining on this summertime Friday or Saturday. We're going to keep things short, actionable, and right to the point here in this summertime sort of lower volume trading. Let's get into it here. This video is sponsored by our friends over at Investors Business Daily. We've got links in the description of this show. Check out Market Surge this weekend, do some homework, and check out their introductory offer for trade risk customers. Tell them Evan sent you and enjoy that discount. Now, let's get into some of the headlines here. Front and center, we got to talk about President Trump and Federal Reserve Chair Jerome Powell escalating the tension, escalating the battle, the arena here. We had President Trump visiting the Federal Reserve buildings, scrutinizing the renovation costs, perhaps poking and prodding at ways to get Jerome Powell expedited from the Fed, let's call it, earlier than his term actually ends next year. We'll see how this all plays out, but needless to say, the Fed is under an extreme amount of pressure now, and the spotlight is on them to lower interest rates. That's what the administration wants. They want that relief valve sort of opened up a little bit. Now, next week is, in fact, the Fed meeting, the July meeting for the latest policy rate, and I'm highlighting it here because right now there is no expectation. It does not seem like this next week is going to be a live meeting for the Fed. Everybody is kind of expecting that they're going to keep interest rates steady. I think most importantly, as usually is the case, what is the rhetoric? Do they soften their stance? Do they open up perhaps September? And that's what the market is going to be chewing on. It's a very, very busy week next week. We've got a Fed meeting, we've got a jobs report, and we have the busiest earnings week. So there's going to be a ton of data and a ton of market moving headlines to hit the tape. Now, the second story I want to talk about here, I was on the Daily Rip with StockTwits and Katy Perry earlier this week, and we were talking about meme stocks, and Katy was saying how I think they were observing at StockTwits that the volume of stocks traded and messages under $5 of a share price, which is kind of the more meme stocks, the more retail driven stocks, they're kind of exploding to all-time high volumes. And we're going to spend some time here talking about this theme this week because it is important now as traders and investors to understand where we are in this cycle. We've enjoyed 4 months off those April lows of basically straight up. Throw a dart at the screen, anywhere it lands, you're making money, right? And so, if you're a trader out there, and I'm starting to see a lot more emboldened traders, right? A lot more excited traders, right? They're putting out spreadsheets and they're saying, well, if I do this for another 2 years, I'll have $1 gazillion by 2030. And so you do want to take note of that. It doesn't mean we have to, come cratering down. Doesn't mean sell everything and get into the bunker. But I think it means that you should just be aware that we've had a very good run here. You should be cognizant of your risk. You should not be going down the risk curve to more speculative names. You should be following your process, right? Following your workflow. And if that still means taking stocks and breakouts and momentum, that's entirely fine. But, don't find yourself now putting a bunch of extra cash in some name that's popping up on Reddit because the times are good, right? So be aware of that. We're going to look at some more charts as we go through this. So Palantir is one. So Palantir, this is on our momentum model. So our Quant Rockets momentum model has been in this stock since April 15th. 69 days, it's up 70%. Absolute monster, incredibly difficult to hold. It's at nosebleed territories. I don't recommend anyone run out and buy this now. It has had its move. It's frothy. It's extended, but it's working. And so, again, this is to speak to kind of the poster child of meme stocks. And yes, Palantir is a real business. And, don't send in the hate mail. I understand that they are generating lots of money, but they are also trading at an extreme kind of valuation. And every dip here just has been rewarded. It's been a flow type stock. Retail is all over this. I think it's a hedge fund pain trade at this point, but it's at all-time highs. It's working. It's in our momentum model, and it's just continuing to produce gains. Eventually this will turn, right? Eventually this will see a substantial sell-off. This will get off our model and we will be out of it. But for now, and this is kind of the other side of the coin, is these types of environments, even though they are very frothy, right? You do still need to force yourself to participate if you're a trader, right? Because these are the good times. These are the golden times where you almost can't afford not to have some participation in here, right? So you don't want to just be so stubborn to say, oh, wow, there's so much speculation. This is crazy. Retail is going nuts. I'm just leaving, right? Because now you're giving up a lot of this upside gain, right? Because this will end at some point, but will it end this week, next month, 2 months, and 3 months? And will Palantir be $250 a share before it gets its meaningful correction, right? So all is to say, and again, I do want to just drive this point home because we haven't talked about sort of the froth and the extension that we've seen, but it's noticeable, right? And so let's just be aware of it. Let's still manage risk like professionals, but let's enjoy the times, but let's keep aware of where we are. Google this week reported, or Alphabet reported earnings, slight beats across the board, and was marginally rewarded here by the market. I mean, they did sell the initial gap, but Google is kind of a comeback story. It was late. It was seen as a behind, the AI trade, and ChatGPT and everything else was eating their lunch. And it seems like they're kind of getting their act together. They're getting a little more rewarded here by the market. It's coming back in to fill this old gap. It's not quite back at all-time highs, but it's starting to perform, and earnings are out of the way. Tesla, another one that reported earnings this week, initially kind of sold off the stock after earnings, and then it bounced back on Friday a little bit here. It's still broadly range bound. It's a polarizing stock for so many reasons, but it's in all of the right big, themes and catalysts right now in the market. So I think, it gets lots of passes in terms of its actual today numbers, because everybody's looking at what could it be in 2, 3, 4, 5 years. Stock market is a forward-looking mechanism. Now, if we take a look at performance here for the week, again, all-time highs, index closes almost across the board. S&P up 1.5%. Very strong week here. You can see it was basically up and to the right. And again, this is the vertical nature of markets. Very shallow pullbacks. Dips are being bought. Momentum is here. The good times are here. And there is just no signs of worry. We see the VIX here, speaking of no signs of worry, back below 15, making new lows now. Again, eventually this will turn. This will see a spike. We will get concern and worry out of this market. Mark my words. But it's one of those things where the timing is very, very difficult. I couldn't tell you when this is going to turn. Is it next week or is it in a month, right? So that's what we're going to keep our eyes on. That's why we do these videos each week. We got the US dollar, which had a pretty decent sell-off this week, intra-week, and then it started to rebound here into the end of the week. Notice this rebound was getting a little bit longer than some of these others. So the US dollar is still in a tough longer-term spot, but it is showing signs like it wants to stabilize a little bit here and find some buyers under this, $98 area. 10-year Treasury yield sold off a little bit towards the end of the week, but kind of flat, all things considered. It's messy. It's like the dollar. It's kind of range bound here. Lots of attention on it, of course, for good reason, but pretty much going nowhere from a broader perspective. Now, one thing that does stand out from a sector perspective is XLV, so 3.5% up. Healthcare, it's one of the themes we talked about. I talked about with Katie on the show earlier this week is healthcare catching a bid. And healthcare has been a painful spot to be for the past 2 years. It's been one of the worst performers on a relative basis, but it's showing some signs of life here. And I would argue even consumer staples are. And so again, if you start to get more concerned about the market and tech and risk and high beta stocks, this is going to be an area of potential rotation. These are two spots that are kind of firming up a little bit, healthcare and staples. But this week we had healthcare, materials, industrials at the top of the list. Every single sector was in the green. Our smart trend filter indicator, so this is available for TC2000 and TradingView users on our website, is showing bullish positioning across 8 of these market sectors at this point. So again, breadth is good. Things are in daily uptrends for the most part. If we go to the neutral state of this indicator, we basically have consumer staples, energy, and communication services, which are showing kind of neutral, choppy readings right now. There's nothing bearish right now on daily smart trend indicator. Let's keep moving here. 252-week highs and lows. Not a whole lot new to say about it. It's kind of just stagnating here. We're not getting a tremendous amount of stocks hitting 52-week highs, despite the fact that the indexes are continuing to push new highs. So that shows you that breadth just really hasn't fully expanded out. We're not seeing a tremendous amount of small cap, micro cap participation, at least not yet. It's stronger than stocks hitting 52-week lows. It's marginal at best, but we're still seeing a very market cap concentrated weighting pushing to these new highs. Keep moving here. Put to call ratio, not too much to say about it. Bitcoin, so started to roll over again. This was our call last week. So last week we talked about potential weakness here in Bitcoin, the fact that it could maybe kind of roll over or check back or just consolidate further. We felt it had a couple of attempts to try and break out that just failed and couldn't get its act together. And so now we're starting to see the downside get tested. I still think this is remarkably healthy action at this point. There's nothing all that concerning to me. I would say, from a bigger price level here, as long as we're closing above 110 or 112, that's still all pretty, fine and dandy area of consolidating and pulling back. So generally, our trend model still has positions. I still have positions here in Bitcoin, but it just might need a little bit of time. Gold miner. So last week I kind of went front and center on gold. Gold, I think, was down this week slightly, kind of started the week off up and then it pulled back. Gold miners, though, showing a lot more relative strength this week. In fact, closing convincingly higher this week. And this technical pattern is starting to look good again. Gold miners, speculative, right? They're kind of a scary bunch for lots of folks. I really don't kind of go down to the individual basis all that often. I would just prefer to go GDX. Keep an eye on this breakout here. Going to need probably some gold support, some gold to rally next week for this to break out. But, if you want your high beta, this is it. I think GDX is up 60% year to date. So it's a monster performer. Just a couple of other trade ideas as we wind down here. So NXT, I think I've talked about this at least once or twice. It's just, trying to surface a few of the not so extended stocks on our Quant Rockets momentum model. Palantir, obviously, so extended. Don't advocate chasing it now. NXT, just a lot more, kind of cool, calm, and collected. Full disclosure, I have a position in this. Our Lamar trading system, so this is our mean reversion short-term trading system, is starting to build up more on this side, short exposure here, right? So if you take a look at how it's positioned right now, it's basically got 3 longs, 3 shorts, and then a little bucket of cash. So it's getting a little more defensive, concerned, you could call it, or just kind of recognizing some of the risk. I don't know what Monday's orders look like, but I wouldn't be surprised if there's more short setups coming Monday for this short-term system. All right. Yes, this is the slide I probably should have had earlier. So NASDAQ 100 just won't pull back. I mean, this is, again, just where we are and where we've come from since the April lows. And again, let's not forget the first quarter of this year, the first 4 months of this year, were painful, right? They were kind of straight down. Everybody came in all kind of gassed up and excited about this administration and this White House and all the pro-growth stuff, and then it just got rinsed right out, right? We had a very sharp decline, and that set us up for this V-shaped bottom, this V-shaped recovery. But since, you know, call it the second week of April, this is the NASDAQ 100. We've had a 2% pullback, a 3% pullback, and a 2% pullback. And we've covered, you know, 35% to the upside. That's rare. That shows that the market is kind of locked out. It's just FOMO to the, you know, to the exponent here. So again, be aware, participate, enjoy the times. 3 months from now, 6 months from now, we'll look back on this market and say, oh man, that was the, you know, those were the good times. Those were the times to make money. You just don't want to be the last person at the party while everyone tries to hit the exit door. Tesla. Yeah. So Tesla, we talked about this on earnings. Yeah. This is on our momentum model as well. We'll see if it can survive next week. So our momentum model picked it up pretty much right before earnings. It's agnostic to earnings. It doesn't look at earnings as a qualification criteria to our momentum model. It's just based on price, volume, sequence of returns, volatility. That's what goes into our momentum model for quant rockets. But it picked up a buy signal in Tesla. It historically has a very good track record with Tesla. We'll see how this turns out. But yes, I might have a position in Tesla right now too. Don't remember. I think I do. A small one, which I should have mentioned earlier. Earnings. So big week. This is I think the heaviest week of earnings for this cycle. Lots of companies reporting. Shout out to Earnings Whispers for putting this slide together, or this nice infographic. But like we talked about, lots of data, lots of catalysts. If you need the market to move next week, you're going to have plenty of excuses between the Fed, between all the earnings, and then between the jobs on Friday. Thinking this is still getting cut off. But we got, you know, again, just FOMC is the other one too. So FOMC, jobs, and then all the earnings. So there's plenty to think about for next week. So that's it. That's what I have. Just follow the plan, right? Again, meme stocks, the craze, the market that's going vertical doesn't mean you have to exit. You still participate thoughtfully. That's what this is all about. Don't forget to check out the links in the description of this video. Thank you so much for tuning in. We'll be back next Friday. Take care. Have a great weekend.